Happy 4th of July. Let's go through 9 things about the big, beautiful tax bill that you need to know, politics aside. These charts we are using, this side is gonna be the old stuff, this side is gonna be the new bill, just so you know. The first two, we are gonna have different deductions for 2025. For a single filer, $15,750. For a married filing jointly, $31,500. If you are 65 or older, you get a bonus deduction of $7,600, which is up way big from $1,600 prior before this tax bill. Coming in at number 3, we have a bigger child tax credit of $2,200. Tax credits are huge because that's directly offsetting whatever tax you owe, and then $1,700 of it is refundable if you don't owe that much. Then if you are giving away part of your estates, we have now $15 million to give away, or 30 if we are married filing jointly. So hey, if we're giving away that much money, sweet. And then this one is a really important one, tax on tips. We had no legislation to this prior. Now you can deduct $25,000 of your taxable earnings, but there is some income limitations to that. Here are those limitations. If you're single and make more than $150,000, or if you're married and make more than $300,000, then this deduction on tip income would not qualify for you, but hey, you're doing pretty well if you're making that much. Coming in at tip number 6, similar to the tip income, we have overtime pay, where you can deduct $12,500 of your earnings and have it be tax-free. Again, we had nothing here before, but there's income limitations again. These income limitations are the same thing, $150,000 if you're single, or $300,000 if you're a joint filer. You can also see that you can deduct $25,000 for married couples on the overtime side, which you can double that $12,500. Tip number 7, you can now deduct up to $10,000 of interest on new loans, auto loans from 2025 to 2028. We had nothing on this before. It's not as good as it seems. I'm gonna show you that in a second here. If your income is above $100,000 if you're single, or $200,000 if you're married, you can't take this deduction, and the cars must be assembled in the US. So this is a pro-US thing to be able to deduct that interest on the auto loan you might have. Coming in at tip number 8, we have now this new child savings if you're born between 2025 and 2028. So probably not you, but there is a one-time $1,000 credit going to these individuals born that's going to be invested, which is actually pretty sweet. It's basically like a jump start to investing for individuals, and it's going to be in a diversified US stock index fund. Employees can also contribute to this, or employers. So there is some additional stuff if you are a family person that can help you here. Final tip number 9, we have some charity stuff here. You can deduct your income by $1,000 or $2,000 depending if you're single or married filing jointly. Most people take the standard deduction, so this is good for them because they can reduce their income if they're charitably inclined. And on the 4th of July, that is 9 things about the beautiful tax bill that you need to know about or should be aware of. I don't care about your politics. You don't care about my politics. I just care about your financial situation and well-being, and hopefully explaining that helps out. Chris Lee, Everyday Finance. I will see you in the next one.